Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane, and this week we're discussing California conformity to the Secure 2.0 Act. We covered this topic in the February issue of the California Tax Letter, and that article also includes a 5-page chart of provisions and whether California conforms. Also, as we do each year, this podcast will be on hiatus through tax season, and you'll be receiving the Tax Season Tribune, which is a short weekly newsletter that has lighter fare than our regular content. The podcast will resume on April 23rd. To state that California conformity issues are complex is an understatement. This is especially true when it comes to retirement plan and savings issues. This is why we can't provide a simple yes or no answer when tax professionals ask whether California conforms to the Secure 2.0 Act changes. To understand California's conformity and nonconformity to the Secure 2.0 Act provisions, it's important to have a little background. The general rule is that California only conforms to federal law as it was in effect on a specified date, which is currently January 1st, 2015. This means that unless California updates the specified conformity date or specifically enacts a law incorporating a post-2014 federal law change, California will not generally conform to any of these changes. One major exception to this rule involves retirement plans. California automatically conforms to any federal law change governing retirement plans as they relate to minimum funding standards and benefit limitations. Essentially, this means that if a plan is considered a qualified plan for federal purposes, it's a qualified plan for California purposes. Examples of plan qualification provisions include the required minimum distribution issues, such as the age taxpayers have to begin taking RMDs, and the rules governing the period in which inherited IRAs have to be distributed. California automatically conforms to the changes to these provisions. California also automatically conforms to Roth IRA treatment under IRC Section 408 Cap A. And California automatically conforms to changes made to the premature distribution penalty imposed under IRC Section 72, subsection T. This means if a distribution is exempt from the 10% premature distribution penalty under federal law, it's also exempt from the California 2.5% premature distribution penalty. Although California automatically conforms to retirement plan qualification provisions, California does not automatically conform to provisions that address whether contributions are deductible or distributions are exempt. The rule of thumb is that California only conforms to these tax provisions as of California's specified date, which is January 1st, 2015 for deductible contributions and January 1st, 2010 for elective deferrals. So California conforms to all plan changes, but changes in the dollar limitation on the exclusion from wages or increased deductions from income do not automatically apply. When California doesn't conform to these federal increased amounts, the law is clear about a few points. Plans that are amended to conform to the federal limits will not be disqualified for California purposes. A taxpayer's retirement plan contributions up to the federal limits will only be included in the recipient's California income to the extent of the excess over the California contribution limit, and the taxpayer's California basis will be increased accordingly. And earnings on the excess contributions will not be currently reportable income for California purposes. These earnings will only be taxable when they're distributed. This means California does not currently conform to the Secure 2.0 Act increased deductible IRA and qualified plan contribution limits. If California doesn't enact conforming legislation, taxpayers will only be able to claim deductions for pre-Secure 2.0 Act deductible contribution amounts on the California return. The 358-page Secure 2.0 Act includes many retirement-related provisions that both your individual and business clients need to know. Attend our Secure 2.0 Act webinar on February 3rd to get detailed information on all of the new provisions and find out when each one goes into effect. That's all for this week. Have a productive tax season and look for the first episode of Season 8 of Spiedel's California Minute on April 23rd.